Outside, one can see and feel the autumn season, but also for the economy, autumn is clearly there. New figures for the third quarter of 2018 have become available for the European economies as well as for the US economy. For the euro area as a whole, the third quarter growth dropped to 0.2% on a quarterly basis, while for the US economy, growth is still pretty high at 0.9%. Now, the disappointing figures for the euro area economy in particular is hiding actually a lot of heterogeneity across European member states. Some countries are reporting relatively good figures, for example France and Belgium, while other countries clearly disappoint. In particular, Italy is a major disappointment in the third quarter of 2018, which is no surprise given the state of the Italian economy and the uncertainty surrounding the Italian budget at this moment. Apart from new growth figures for the third quarter of 2018, there are also new inflation figures. Inflation accelerated in the euro area till 2.2%, which is clearly above the target of the European Central Bank. At first sight, this is good news for the European Central Bank because it allows the ECB to end its asset purchase program at the end of 2018 and to increase interest rates in 2019. We expect the first rate hike after the summer of 2019 in line with the communication of the ECB. Also, the Federal Reserve is still continuing its normalization path. Inflation declined slightly in the US, but we suppose that this is a temporary effect. Generally speaking, we expect that the Federal Reserve will increase its interest rates several times next year, just to avoid a hard landing in the US economy. Generally speaking, inflation is very much affected by oil prices, which are currently declining again. However, the more fundamental trend are the inflationary pressures which are created by increasing and accelerating wage growth. Especially in the US, we see that the wage growth increased to 3.1% on an annual basis, but also in the euro area and several countries we see that wage growth is accelerating. All of this is adding to more inflation in the future. The global economic climate has been affected by lots of uncertainties in recent months. In particular, in the European context, Brexit and the Italian budget have been very important factors. Italy remains a Damocles sword for the European economy. Italian growth declined to 0% in the third quarter of 2018, and moreover we see that all sentiment indicators are deteriorating. Consumer sentiment as well as producer sentiment. At the same time, we see that Italian wage growth is accelerating. Now, this cocktail can be very dangerous. Generally speaking, it's very important that the Italian government will reach a deal with the European Commission on its budget. A budget that should at the same time stimulate the Italian economy while still implementing austerity measures and necessary reforms, in particular in the Italian labor markets. Italian long-term interest rates remain at very elevated levels, and also the spread between the Italian long-term rates and the German rates remain pretty high. Clearly, markets try to force the Italian government to reach a deal with the European Commission. To sum up, the third quarter of 2018 was clearly a weak and disappointing quarter. Economic growth is slowing down. It is clear that the economic environment is becoming much more difficult. It remains to be seen whether the sentiment indicators that are pointing to a further deterioration in this sentiment are actually true. If this is happening, then the economic autumn that we currently observe in the European economy in particular might become a real economic winter.